Hi student, how are you? We are meeting after a long time. Now pandemic is on a lower side. So our school are somebody schools are opening or yet to be open and some are running. So and also the pandemic is over, is going to be over. So one thing is over, another thing is yet to coming here, yeah, and it's coming now. It's so what is coming now? What is we are forecasting, that is our exam will be offline. So when it's whether it's offline or online, you should have proper knowledge regarding the chapter, because if whatever may be the case, so if you don't have the proper knowledge in the chapter, so in higher classes as class 12 you can't able to cope up. So we should know the chapter thoroughly, so that whether it may be offline or online we can secure good marks. So today's chapter, because as your exam is nearby, I think depreciation will be a part of your syllabus in the exam. So I am giving a short concept of depreciation. So do you know what do you mean by depreciation? So I am writing the word depreciation. Depreciation. So what do you mean the word depreciation? Depreciation means diminution in the value of asset. Diminution in the value of asset. So why the value of asset decreases? Due to there are different type of reasons. So you may say that due to constant use. Suppose you purchase a particular asset means which you can use for long period of time. Suppose you purchase a plant and machinery. So how long you can use? There is some specific life period of the asset. Say it may be for 10 years or 15 years. So after the expiry, you need to purchase same type of asset. Now the question is from where you can get the money. You can say, sir, we can get the money from the profit, but it may happen that at that year you don't have such enough profit from where you can get the amount to purchase the same kind of assets. So you have to keep aside some amount every year, so that you can accumulate enough fund to purchase same type of assets. So what is depreciation? Depreciation is allocation of fund. So from the profit you are keeping aside some portion of amount, you are keeping aside some profit, you are creating a fund. Depreciation, so depreciation is necessarily a fund. You are creating a fund so that you can purchase same type of assets. Suppose I am giving you an example so that it will be more clear. So suppose a particular asset price is 10,000 and this is the cost price. So if you purchase an asset, you install it. It's not like something that you purchase a pen and start writing. So if you purchase any asset, you need to install it. For installation charges, there is some expense, that is installation charges. Installation charge. Suppose it is 5,000. So what is the total cost of asset? It's 15,000. So every asset has some life period. So suppose its life is for 10 years. So after 10 years, it may happen that it won't run. So you have to sell it. So suppose when you are selling it, you are getting a very nominal amount. Suppose you are getting a amount of rupees 3,000. This is known as scrap value. Scrap value. So what is scrap value? At the expiry of the life, when the particular assets stop running, so at that time you have to sell the asset at a very nominal price, that is scrap value or breakup value. Our name is breakup value. So in our example, we are incurring cost of 15,000 and the life is 10 years and scrap value is 3,000. So how much we need in order to purchase the same type of machine after its expiry? So we need 15,000 minus 3,000. Why minus 3,000? As we are getting it after the expiry. So we need 12,000. So in how many years? We need in 10 years. So per year, if we keep aside 1,200, so after the expiry of 15 years, we can accumulate enough fund, that is 12,000, and with that amount we can purchase the asset. So from our example, we can easily sort out a formula of charging depreciation. So remember, there is no such, you can't mug up any formula until and unless you are able to understand it. So the formula is cost price plus installation, because we need this amount of that in order to purchase same type of asset, minus scrap value, because we are already getting this value after its expiry, divided by life. So in this case, we are keeping aside same amount every year, so that after expiry you can purchase same type of asset. So why we charge, what are the causes of depreciation? There are different causes. So first of all, there is a constant use, a value reduce, a particular asset loses its value. It may happen due to obsolescence. Suppose you purchase a computer, a laptop, so after 3 years, due to immense change in technology, you think that this laptop is obsolete. It's better to purchase another new modern technology laptop. This is also part of depreciation. Or it may happen there's a depletion in coal mines, charging the same method of depreciation. But the one main problem, that is the income tax law does not permit this kind of method. Why? Because you see, after 10 years the value of asset becomes zero, but actually it doesn't happen. There must be some value, but if we charge depreciation under this method, it shows that after it is zero. For that reason, the income tax does not permit this method of depreciation. So what they permit? They permit the second method, which is known as diminishing balance method. I am giving you an overall idea so that you can easily solve the problem. In next class, I will go through the problem. So next method is known as the diminishing method. What is diminishing method? Diminishing method. If you one thing, if you have any query, just give me a call. You can give me a call. My number will be there, or you can ask me any kind of question. I will be there with you 24/7. So diminishing method or reducing balance method. Or also, if you like my video, then kindly, if you like the way of my teaching, and if there is any kind of problem with you, kindly support me, kindly comment on my video so that I can improve and I will be inspired to do this kind of video more. And one thing is that I am trying my best so that you don't need any kind of tutor offline, so that you can easily do any kind of problem, any sort of problem. I will help you to do it. Reducing method or diminishing method. So what is reducing? The word reducing means the value of the asset gets reduced as we charge depreciation. So that's the actual scenario. So see, so if you purchase a machine on 1/4/2000 for rupees 10,000, and you are charging depreciation, less depreciation at the rate 10%, which will be 1,000. Now it will be 9,000. For the second year, in our previous example, when we have charged depreciation the straight line method, we have charged on 10,000, and for that reason, every year the amount of depreciation remains same. But in this case, as it is known as reducing, the value gets reduced. See, so we are charging now we are charging depreciation not on 10,000, but on mines, the amount of quantity of coal that we extract. Suppose there is 100 ton of coal in a coal mine. Every day we are extracting 1 ton. So what the quantity of coal you are extracting, this is the amount of depreciation. So these are the causes, the theoretical portion, you have to go through it. I am coming from the practical portion. So where in there is cost price is given, installation is given, scrap value is given, life is given. So through this particular formula you can easily find out depreciation. But when it's not given, there is some percentage mentioned here. What is the percentage? Suppose I am giving a separate example along with a practical problem so that you can easily able to understand. So when there is cost price should be given. When there is scrap value is not given, life is not given, so there is some percentage given. Suppose it's a 10% given, that is depreciation is 10%. So when the percentage is given, you have to see that what method they are asking for. So there are different methods but for your syllabus, you have to know 2 methods. What are those? One is straight line method. The other name of straight line method is original cost method. And another name is assigned is fixed installment method. So from this name you can easily able to understand that it's fixed installment, that is the amount of depreciation remain fixed. So how it's possible? Suppose you have purchased one machine on 1/4/2000 at the cost of 10,000 and the depreciation rate is 10%. So how much you should charge? As accounting year start from April and ends on the next year March. So you have 12 months in your hand. So you are charging depreciation on 10,000. So 10% on 10,000 is less depreciation. Suppose they have asked you to charge for 3 consecutive years. So first year depreciation will be, so it's 1,000. Now the value is 9,000 less second year depreciation. So as it is fixed installment, so you should charge depreciation on this 10,000. Every year you have to charge depreciation on 10,000. Another reason is that this means the original cost. The original cost means the cost which you have incurred at the time of purchase of the asset. So you have incurred 10,000, that is your purchase cost is 10,000. So every year you have to charge depreciation on 10,000 only. So second year also it will be 1,000. It's 8,000. Third year will be also depreciation 1,000, 7,000 and so on. It will be continued. So every but on 9,000. So 9,000 into 10% makes 900. So its value is 8100. If they have asked to charge depreciation for the third year, less depreciation for third year, it will be 8100 to 10% will be 810. The value of the asset is 7290. So I am giving you a separate and writing you here. This is on the straight line so that you can easily compare. In first our example, we have charged depreciation 1,000 which is 9,000. Next again 1,000 which is 8,000. Again 1,000 which is 7,000. So you can easily compare the two methods side by side. In this method, you see depreciation every year remains same because it is fixed installment. And under this method, the value of depreciation gets reduced, amount of depreciation gets reduced, and this method is permissible under income tax law because there is some value remaining after the life or expiry of the asset. Now you should know some journal before doing the depreciation because depreciation is basically a ledger. We have to prepare machinery account, depreciation account, all those items. So first you should know, so already you know the journal because these are the basic journal. Then also I am giving you a revisionary class on the topic of depreciation. The journal required only for depreciation, not the full journal, only the journal required to do depreciation. So first, when you purchase machine, what is the energy? You know, I have already taught you. So at the time of doing journal, you have to ask yourself two questions. What? Number one, cash is involved. Obviously, you may purchase on credit also, but if nothing is mentioned, it's implied that you have purchased on cash. Because if the name is there, purchase machine from Ram, purchase machine from Kazi. So if the name is involved, it implies that you have purchased on credit. But as there is no name, it means that you have purchased on cash. So cash or bank, that means probably bank because it's a huge amount. So you cannot pass through cash, you have to pay through check. So purchase machinery. So what I am telling her, so you have to ask yourself two questions. Number one, is there any cash or bank involved? Obviously there is cash or bank. Number two, why? What is the reason of involvement of cash? Because we have purchased machinery. So there is one machinery account and one bank account. And machinery account, what kind of account? You know it's a real account. Everybody know. So what real account golden rule? Debit what comes in, credit what goes out. So we are purchasing machinery. What's coming in? Machinery coming in. So what we debit? We should debit machinery. The entry will be machinery account debit to bank. Second, if we sold machinery, it will be reverse of this one. So when you selling machinery, bank is coming in and machinery is going out. So both bank and machinery real account. So what's coming in debit, what's going out credit. What's coming in? Bank is coming in. So it will be bank account debit to machinery. Next, depreciation charged. We have to show the depreciation journal. Depreciation charged. So what kind of account is depreciation? Depreciation is a loss, kind of loss, because when you are charging depreciation, the value of asset get reduced. So depreciation is a nominal account. What is the rule of nominal account? Debit all expenses or losses, credit or gains and income. So this is our losses, kind of expenses. because we are charging depreciation, so we should debit. So what will be entry? Entry will be depreciation account debit to asset, machinery. Why asset? We are giving credit to asset because what kind of account is asset? The real account. What is the rule? Debit what comes in, credit what goes out. So when we are charging depreciation, the value of asset get reduced. So for that reason, we have to create depreciation. And last one journal, number 4. Number 4 journal is if we incur profit or loss on the sale of machinery. Number 4, loss on sale of machinery. So loss, we know in case of loss is a nominal account. So in nominal account, debit all expenses and losses. So we have to debit the loss. So it will be profit and loss account debit to machinery, because due to loss machinery value get reduced. And number 5, last one, profit on sale of machinery. It will be opposite of the previous one, that is machinery account debit to PL, profit and loss. In our next class, we will categorically solve all the depreciation problem. All the depreciation problem is under 2 methods, fixed installment and diminishing, and any kind of query you can ask me. But please support me, like me our video, like on my video, so that I can help you in a more elaborate way. I want to help you in a way so that it will be, the chapter will be more lucid to you, so that you can easily score good marks. Okay, bye bye friends. See you.